Bowman, Logan, Kashkari, Goolsby, and Barr. Whew, that is one heck of a law firm. That's your slate for Fed speakers tomorrow, and that could be a good enough palette for bulls to seal the deal. Today was really interesting again. Even though we've got a nice session with a lot of green, there are a lot of curiosities in here. One is that Nvidia still had a down day. Two is that Bitcoin's like asleep at the wheel. Three is that the Russell 2000 is leading and the small caps have been the shakiest trade in the market this year. Four, what's with utilities? The old classic safety trade is going ballistic, something that really only beats tech at this pace during times of a pivot away from momentum. But tomorrow's pretty straightforward. You've got sentiment and you've got a bunch of Fed speakers. And generally, of course, so far lately, Fed speakers have been very positive for the market. That's pretty much what got us into this bounce back. Now, technically speaking, nothing's changing on my risk radar for stocks until we get through 5,200 and then to the high. Step one, success. We are through 52. We've been trading on it. But the reason why I want to see the high for the S&P 500 is because when you have a high momentum trade, a frothy run up, it's the new highs that tell you it's continuing. Right now, we're still in the middle of a bounce back. There's so much trading between 52 and 53 on the way down that it's going to be tough to get through. Look at the 10-year yield as well. Right now, you've got an interesting situation. Firstly, for S&Ps, 52 to 53, a lot of trading we got to get through. For the 10-year yield, we've got a potential push back here from bulls with the yield dropping today. Look at where we ran in to resistance on yield and support for price. 4.5 is exactly where we were on Friday after the jobs report. I think that's a pretty big move on the chart, the fact that yields couldn't get back through that level. Because you got this big event for jobs, push the chart down to a certain point, and then the reversal stops out right at that point. So it looks like there's a lot going here if you believe that bad is good. And that there is the catch still. Because ultimately we're getting these bids into bonds because data are coming in soft again with the jobless claims. So our economic surprise keeps nosediving for the non-inflationary data, and then the inflation data is still sticky. So tomorrow we should generally expect the commentary to mostly be positive, but there are a few hawks mixed in there. No question about it on the spectrum of Fed speakers. I grabbed this from Neil Dutta, who was here with us earlier this week. Okay, here's Bowman, here's Logan, here's Kashkari. So this is a little bit on the hawkish side. Of course, you've got Goolsby, who's been very dovish, but even the last time we heard from him, he was kind of throwing in a little bit of cautionary kind of, maybe we can't cut as fast, but we're still going in that direction. By his standards, it was appreciated to see some variety. So the potential then for this maybe feeble rally. I'm calling it that. It's kind of a bold way to describe it, but there's just too many things here that don't scream risk on. If there's anything other than pure dovishness tomorrow, I still think there's a lot of potential for chop in the 52 to 53 range. If bulls can seal the deal, get us back to 5,300 and start fighting for the highs, then you've basically gone through the area I thought would be resistance, and then it's party on. We'll see if they can seal the deal tomorrow. Have a good night.